We're doing budgets. Then for your information, every sitting we must have a question either on budgets or standard costing. We must have a question on budgets or it is a must. If we don't have questions on standard costing have been coming every sitting. So now budgets, you need to be very keen. Every sitting. So now under budget, you need to define what is a budget. Definition of budgets. You need to define what is a budget, number one. Number two, you need to know the types of budgets. You need to know how to prepare types of budgets. Types of budgets here. And here we have functional budgets. Functional budgets. We have cash budgets. We have flexible budget, flexible and fixed budget. And then we have master budgets. And then you need to know the differences between forecasting and budgeting. Forecasting and budgets. What are the differences? You have characteristics of budgets. So this one will come under definition. So these are the things that they test. Mostly they test how to prepare budgets. You need to know how to prepare these 4 budgets: functional, cash budgets, flexible, master budgets. And then we have, so now when you go to the handout, I don't know whether you have the handout of budgets. Do you have it? So according to the definition we have there, a budget is a financial statement which is used to project the expected revenue, cost, assets, liabilities, and cash flow. So it is prepared at the beginning of accounting period. It is prepared at the beginning of the accounting period and it covers a particular period. So a budget is a financial statement that shows the projected revenue, the estimated revenue, cost, assets, and liabilities. That is a budget. From that definition, you can be able to identify the characteristics of a budget. Number one, it covers a particular period. That is a characteristics of budget. So there's a question last sitting which they want the student to list down the characteristics of a budget. Some of the students were unable because I don't know why. So the characteristics can come from the definition. So it covers a particular period. And number two, it's expressed in monetary terms. So it must be expressed in monetary terms. It is quantitative. It must be expressed in monetary terms. Then number three, another characteristic of budget is that it is not prepared by one person. It is prepared by many people. It's prepared by, and then it outlines the policies. It outlines the policies and targets to be pursued in a particular period. It outlines the policies and targets to be what it is that is being pursued. That is a characteristic of budget. It outlines the policies and targets that are being pursued in a particular. It outlines the targets and policies to be pursued in a particular period. And then it's very practical. It is very practical. What do we mean by practical? There are things that we need to attain. It's tangible things that we need to attain. So those are characteristics of budgets. So this topic is very important. Why is it important? If you're engaged as an accountant anywhere, one of the things that they want you to do is to prepare budgets for them, isn't it? And then even at your own personal level, it can also assist you to come up with your own budgets. It's good to have budgets, isn't it? Some people say when you budget, you're selfish. Is it so? So budgeting is necessary. It can help you to get a job. If you can't budget, then you are not a full accountant, isn't it? And then now we have objectives of budgetary control. Why do we budget? We have objectives of budgetary. We have objectives of budgetary control. Number one is to communicate ideas and plans. Why do we need to budget? To communicate ideas and plans. And then for coordination of activities, we coordinate. We use the budgets to coordinate. We can be able to, we have different departments in organization with different targets. So we can be able to communicate these targets and we communicate. And then it also used to motivate employees. When you attain your targets, you feel motivated, isn't it? If you have set a particular target and then you attain it, you keep on setting higher targets and the motivation is high. And then it can also be used for performance evaluation. We can compare the actual and the budgeted. So those are the objectives of budgetary controls. Then we have the problems of budgetary control. It is a costly exercise, for example. It requires a lot of money to come up with budgets. Sometimes budget might be unattainable. So you might set unrealistic targets, and then this one will be a source of demotivation. When you are not attaining the targets because they are not very realistic, you become demotivated, isn't it? If you say that this is what you need to attain in terms of revenue, and then you don't attain it, you become demotivated. It also consumes time. It consumes a lot of time to come up with budgets. Then also budgets are based on forecasts and things keep on changing. So sometimes budgets becomes very difficult to attain because of the changes that are occurring now and then. And sometimes when those ones who are supposed to pursue the targets are not involved in preparation of the budgets. So you just tell people that this is the revenue that we have budgeted for you to attain. And you do not involve them in the first place in coming up with those targets. So they bring problems, isn't it? They can bring problems. Those ones, if you impose budgets on people, it can be a source of negative behavior. People will resist. People don't want to impose things on them. They want to participate in coming up with solutions. So if people are not involved in budgeting process and you want them to implement it, they will resist. Then we have steps in preparation of budgets. You can read those ones. We have things like budget committees, you read them. So I want us to go straight away in preparation of budgets. We have functional budgets. So we want to start with functional budgets. We want to start with functional budgets. So we have functional budgets. A function is a department within the business. So functional budgets are budgets prepared according to departments. So here we have sales budget, we have sales budget, we have production budget, we have material usage budget, we have material purchases budget, labor cost budget. And then number 5, we have purchases budget. So these are the budgets. A function is a department within the business, and these are the budgets that are prepared within those departments. For example, we have a sales budget. This one is for sales department, is it? Production budget, this is for production department. Material usage, still for production department. Labor, still for production. Purchases for purchases department. So you need to know how to prepare those budgets. We're going to use a question to learn how to prepare those budgets. So the first question I'm going to do is May 2017. CPA May 2017. Question number 5B. CPA May 2017, question number 5B. CPA May 2017, question 5B. CPA May 2017, question number 5B. we are looking at functional budgets. So the question reads, Ma.Budget Limited manufactures a single product branded PQ. Ma.Budget Limited manufactures a single product branded PQ. The budgeted sales for the month of June 2017 amounts to 10,000 units at a selling price of 2,000 shillings per unit. Additional information: number one unit of PQ requires two components, namely X and Y, as follows. Component X, 5, unit cost of each 20. Component Y, 3, unit cost of each 10. Number two, stocks at the beginning of the month are budgeted as follows: 4,000 units of finished goods at a unit cost of 10.50 shillings. Component X, 16,000 units at a unit cost of 20 shillings. Component Y, 9,600 units at a cost of 10 shillings. Number three, production cost of each unit requires the following labor hours. Production 4 hours per unit, labor rate per hour 100. Finishing hours per unit 2, labor rate per hour 140. Number four, factory overheads is absorbed into unit cost on the basis of direct labor hours. The budgeted overheads for the month is 1,920,000 shillings. Number five, administration, selling, and distribution overheads for the month are budgeted at 5,500,000 shillings. Number six, the company plans a reduction of 50% in quantity of finished goods at the end of the month and an increase of 25% in the quantity of each input component required for the month of June 2017. Roman 1, sales budget, 1 mark. Roman 2, production quantity budget, 2 marks. Roman number 3, material usage budget, 2 marks. Roman number 4, material purchases budget, 3 marks. Direct labor budget, 2 marks. And number 6, budgeted profit and loss account. So here they want us, first of all, to prepare the sales budget. Sales budget. So how do you prepare a budget? How do you prepare the sales budget? The sales budget is very easy to prepare. You just take the sales estimate, those sales that those output they estimate to sell, then you multiply by the selling price per unit. You take a budget is an estimate, isn't it? So you take the unit that are estimated to be sold within that period, and then you multiply by the selling price per unit. So this one they estimate to sell. The budgeted sales for the month of June 2017 is 10,000 units. So this is going to be 10,000 units. They estimate to sell 10,000 units at 2,000 shillings per unit. This is a sales estimate, 10,000 units. At what price? 2,000. So you get how much? 10? 20 million. That is the sales budget. Very easy. You can even see the marks allocated. How many marks? 1. Sindio. And then number 2, we go to production budget. This budget is in units. Production budget is in units, not in money. So it is the sales units, those sales units, of course, finished goods, plus closing stock units. Finished goods minus opening stock units. Opening stock units, finished goods. So those units that you want to produce will be equivalent to the units that you want to sell, plus what you want to retain at the end, minus what was there at the beginning. Sales units, finished goods, plus closing stock units, finished goods, minus opening stock. So here the product that they produce and sell is called PQ. So the product is called, and the sales unit is how much? 10,000 units, correct? Sales, and then closing stock. Closing stock, we're being told in note number 6. The company plans a reduction of 50% of the quantity of finished goods at the end of the month. In other words, the closing stock should be equivalent to 50% of the opening stock units of the finished goods. the closing stock quantity should be equivalent to 50% of the opening stock. So what are the opening stock units? Note number 2. 4,000 units of finished goods are there. So the opening stock is 4,000 units. Note number 2. So the closing stock would be how much? 2,000. See there? And then here you less opening stock, which is 4,000. So you get here the production unit, which is 8,000 units. So that is how we prepare production budgets. It is equivalent to sales units, those units that you want to sell, plus those ones that you want to retain at the end, minus what you had at the beginning. So they're going to produce how many units? 8,000 units. And then Roman number 3, they want us to prepare material usage budget. Material usage budget. In other words, this unit that they're going to produce, they're going to use material. So what is the quantity of material they're going to use to produce these units? So that is what they want you to prepare. So in producing this product, they have two kinds of material. They have material X and material Y. That one should be the heading, X and Y, isn't it? So these units, 8,000 units, they need this material, isn't it? So for you to produce 1 unit of products, PQ, you need how many kgs of material X? 5 kgs, isn't it? 1 unit, for you to produce 1 unit, you need 5 kgs of material X. Why is it additional information number 1? It says 1 unit of PQ requires 2 components. That is the material, isn't it? Material X and Y. So for you to produce 1 unit of product PQ, you need 5 kgs of material X. Now, if you're producing 8,000 units, if you're producing 8,000 units, if you're producing 8,000 units here, how many kgs do you need? So here you multiply by 5, and then you multiply by 3. So this one is going to be how much? So this one is going to be 40,000, let us say kgs. Although they have not written their kgs, but let's assume it's kgs. And this one is going to be 24,000 kgs. So that is the material usage. Material usage. Yes. Yes. Yeah, we 8,000 units and you want to produce, ndio? So tumeambiwa to produce 1 unit of PQ, their budget is they want to produce how many units? 8,000, isn't it? According to our production budget. So now they want to know the quantity of material they're going to use to produce those units. The quantity of material going to be consumed. Then we go to the next one, which is number 4. They want us to do what we call material purchases budget. Material purchases budget. Material purchases budget. So they want to know the material purchases budget is in both quantity and money. So it is material usage. The material they're going to use, it is material usage. The material that you're going to use plus closing stock raw material. Closing stock raw material minus opening stock raw materials. That is how we prepare the material usage budget. The material that you're going to use in production plus what you intend to retain at the end minus the opening stock. So we have material X and material Y. We have material X and material Y. So material usage here. Material usage. So they intend to use 40,000 kgs for material X and 24,000 kgs for material Y. And then you add closing stock raw material. Closing stock raw material. So how do we get the closing stock? Note number 6 says the company plans a reduction of 50% in quantity of finished goods at the end of the month and an increase of 25% in the quantity of each input component. So now the closing stock of raw material is equivalent to 125% of the opening stock. So you increase the opening stock by 25%. That one will represent the quantity at the end of the month. So the opening stock, the closing stock should be equivalent to 125% of the opening stock. So the opening stock of component X, we had 16,000. So 1.25% of that is how much? So the closing stock here will be, so we have multiplied 125% times 16,000 equal to number 2. Note number 2, the stocks at the beginning of the month are budgeted as follows. Note number 2, stocks at the beginning of the month are budgeted as follows. 4,000 of finished goods, correct? And 16,000 of component X. Component X is material X. So they're saying at the end of the month, they want it to be 125% of the opening stock. So na multiply na 1.25 times 16. Unapata ngapi? 20. Si ndio? Aya ingine ni ngapi? 1.25 times 9,600 ni ngapi? So this is 12,000, correct? So that is the closing stock. Then we less opening stock here. We less opening stock. Opening stock here is 16,000. This one is in note number 2. This is 9,600, note number 2. And then you get the material usage in kilograms. Material purchases in kilograms, sorry. So what is it for X? So this is 44,000, and the other one? So this is 26. So this is in kgs. This one you just produce, you show it both in kgs and in money. So here you have been told these are in kgs. You can write here kgs. But in shillings now, in shillings, in note 1, we've been told each component of material X is bought at how much? 20. So here you multiply by 20, and here you multiply by 10. Then you get there in terms of money. So this one will be 26 for na hiyo ingine. So this one will be 880,000. Tumemalizana na hiyo budget. It was material purchases budget. So we can do what we call labor budget. Labor, I think we don't need this place now. So we can do a labor cost budget, labor cost budget. So here they want to know the total costs of labor costs in the production process. So they have two departments. They have a department called production and another one called finishing. Another one called finishing. So they have these two departments. So this product must pass through this department, isn't it? So we have product PQ. It must go here. 8,000 units must go here, isn't it? It also must pass through this department, correct? Lazima zifanyiwe kazi kwa production, ziende kwa finishing, si ndio? So in production department, each unit requires how many hours? So you multiply by 4, isn't it? Each unit requires how many hours in finishing? 2. How many total hours that it will spend in production? 32,000 hours, isn't it? And this one, 16,000 hours, isn't it? What is the rate per hour here? 100. And what is the rate per hour here? 140. So you get the total labor cost. So these units must go through production department. They must also go through finishing department. While in production department, each unit will require 4 hours for it to be worked on. And then now we get the total number of hours that the units will spend in production department. Each hour is paid at 100 shillings. So we get here 3 million two, and the other one 22 40,000. So that is the labor budget. So these are very easy budgets to make. So I'm giving you 2 or 3 minutes before we finish up that part, the remaining portion, which requires to prepare budgeted income statement. So now, can I delete this area? So now we prepare the budgeted income statement. We use this place, isn't it? So we use this for the other side here. So prepare the budgeted income statement. Budgeted income statement. Budgeted income statement. So we can have here shillings and thousands. And you can have your shillings and thousands. So income statement, you have to have the revenue and the cost, isn't it? For you to prepare income statement, you have to have revenue and cost. So we have the budgeted sales. The budgeted sales was 10,000 times 2,000, isn't it? Which was 20,000, isn't it? Then you less cost of production, you less cost of sales or production cost. You less cost of sales. So we have the opening stock. We have the opening stock. Now use the marginal costing system. So the opening stock units were how many units? 4,000 units, isn't it? Valued at what price? 4,000 times 1050. Is it so? That was the value of opening stock according to note number 2. According to note number 2. Opening stock will happen 4.2. So it will how much? 4,200, isn't it? Then you add production. You add production now. The unit that so they are producing 8,000, isn't it? You convert them into money using 1050. Huh? 400. 8,000. And then you less closing stock. Closing stock of finished goods was how many units? 2,000, correct? The closing stock units were 2,000 finished goods. 21. So you subtract 2,100 and you get the cost of sales. Eh? 10,500, isn't it? And then you get 20 minus another, you get the gross profit here. You get the gross profit. 10, 9,000. And then you less admin expenses. We've been told administration expenses how much? We have, is it 4,500? No, to number 5. Admin, you less admin, selling, and distribution expenses, which is 5,500. And then we get the net profit, which is 4,000. So that one gives you how many marks? 6. Very easy, isn't it? So someone might want to ask, what about note number 4? What about note number 4? Factory overheads is absorbed into cost units on the basis of labor hours, isn't it? So that one is already taken care of in 1050. In 10, that is factory overhead. So they have combined all the cost of production, and the cost per unit is 1050. So that one is already taken care of under the 1050. So that is the budgeted income statement. Budgeted income statement. So that is the end of that question. Marks allocated. Wameallocate marks ngapi? $1,600. 16 marks. Season marks ni mengi sana. Now you can take them very easy. So ukishamaliza ufungue September 2021 question number 4B. September 2021 question number 4B. September 2021 question number 4B. Yeah? Sorry, maswali. Hauna maswali? Ati? Au kuna hiyo? Pasifika tuko nazo set mbili. Kuna zile zina So tumeelewana. So we can check September 2021 question number 4B. Yes. Yes.
How did we get it?
We had 2,000 units that were not yet with the closing stock of finished goods, correct? And according to them, each unit is supposed to be valued at 1050, correct? Is this one 2,000 times 1050 is how much? When we are doing the production budget, what was the closing stock units? 2,000 units, did you? Then you convert them into money. The production cost per unit to 2,100. This one, it is 2,100. Supposed to be 2,000. Oh, but you've understood, eh? So by the time today, everybody must know how to prepare budgets, correct? And we are just focusing on functional budget. We are not going to do any other budget. Functional. So I do 1, I do 2, 3, and you do 1, isn't it? And we leave, isn't it? So May 2020, this is September 2021, question number 4B. So even the first one, the entire question, evaluate 3 benefits that could accrue to an organization that has a cost accounting department. When you have a cost accounting department, what are some of the benefits that you can get as an organization? 1, you see that one you cannot be taught in the class, isn't it? But you will have to answer it. So how when you face such a question, how do you answer it? A cost department is the same as management accounting department, isn't it? So what are the benefits of management accounting? It will be easier to fix costs of products, isn't it? Because that department assists you to collect costs, isn't it? So it will be very easy to fix costs. It will also be very easy to control costs, isn't it? You see, you cannot control costs that you are not aware of. You must know that I'm spending my money here, for you to be able to control, isn't it? So it will facilitate control of another benefit. It can do. It can also minimize wastage, isn't it? Because now you can be able to say, you can be able to determine the cost to be incurred in advance, isn't it? So that's now when you're producing something, you are told that you got this much in production. So if you exceed, then is it because that you are wasteful, or what happens so that you do not produce according to this target? So now part B, MK Enterprises produces and sells 2 products branded M and K, which are used as raw materials in production of wall plant. The cost accountant has provided the following monthly data for the budgeting purposes. So we have products M and sales level units 2,000 and 1,500. Opening stock 100 and 200. Material required, material X 2 kgs, material Z in liters 1 and 4. Labor hours required, skilled labor hours. We have 4, and some skilled, we have 2. Additional information, One, material costs are as follows. Material X per kg is 100 shillings. Material Z per liter is 70. Number two, labor costs are as follows. Skilled labor per hour is 120. Semi-skilled labor per hour is 80 shillings. Number three, closing stock of materials and finished goods will be sufficient to meet 10% of demand. Number four, opening stocks for material X was 300 kgs and for material Z was 1,000 liters. So required, prepare the following budgets. One, production budget in units, 3 marks. Material usage budget in kilograms and liters, 3 marks. Material purchases budget in kilograms, liters, and shillings, 4 marks. Labor budget in hours and shillings, 4 marks. Total marks, 14. Senor. So now we are going to start with production budget. So number one, they want us to prepare production budget. So you write here very clearly production budget. So we say here is equals to sales units plus closing stock units minus opening stock. Of course, these are finished goods, not raw materials. These are finished goods, not raw materials. So they are producing two products, product M and, so we have M here and we have product K here. Those are the products that they are producing. So the sales units here. So right here, the sales units. The sales units is 2,000 units for M. Can you see it? And 1,500 units for K. Those are the sales units. And then the closing stock. The opening stock will be given. And then number three, no additional information. Number three says the closing stock of materials and finished goods will be sufficient to meet 10% of demand. Which demand? This is the demand. These are the units that are demanded, correct? So here, right here, closing stock should be equivalent to 10% of demand. Is it 10%? So 10% of this one is how much? And this is, and then we less opening stock. Opening stock is 100 units, correct? This one is 200. So we get the production budgets. So this is 2,100 units, correct? And the other one? 1450 units. So that is how we prepare that budget. That is production budget. The next one is material usage budget. Number two is material usage budget. Sometimes they call it material consumption budget. So they have two kinds of material. They have material X and material. So the kind of material they have told you to prepare, it should be the heading. So here the X material, X and material Z. So those two kinds of materials, we have those two. So material Z, we need the total units, we need 2,000, isn't it? We need the product M. Product, we are producing how many units? 2,100, isn't it? We are producing 2,100 units. Each unit requires how many kgs of material X? It requires 2 kgs of material X. Each unit of product M requires 2 kgs of material. Sinigueli. So 2,100 times 2, how much do you get? 4,000? So it needs 4,200 kgs, isn't it? And then how many liters does it require for, how many liters of Z does it require? 1 liter, isn't it? Correct? It requires 1 1 liter. So this one will be 2,100, isn't it? That is product M in terms of material X and Z. Then we go to product K. How many are we producing? 1450 units, isn't it? How many kgs does it require of material X? 3 kgs. 3? 3 times. How many kgs? This one will be 4350. And then how many liters of material Z? 4. 4 times 1450? 5800, isn't it? So these are kgs and these are liters. So that is the material usage. 7,900 liters. 7,900 liters, and this other one 85 kgs. So that is the material usage budget. So you kama tumeelewa hapo. And then we go to material. Number 3, we go to materials purchases budget. So we say this one, it is a material usage plus closing stock raw material minus opening stock raw materials. So we have material X, and material Z. So these are the materials we have. So material usage. So this one is 8550 kgs, and this is 7,900 liters. 7,900. And then we're being told closing stock, note number 3, closing stock of material and finished goods will be sufficient to meet 10% of demand, isn't it? So what is the demand for material X? Is 85. That is the demand that we need, isn't it? So closing stock here will be 10% of 8550 is how much? 855, isn't it? And this other one is 790. Then we have opening stock. Opening stock is 300 liters. 300 kgs, And the other one? 1,000, isn't it? 1,000 liters. Then we get the material purchases in kgs and in liters. 9105. 9105 kgs. And this other one? 7690. Now in money, material costs are follows, isn't it? So we multiply here by 100 and you multiply here by 7. Each kg, the cost is 100 shillings per kg. The cost is 70 shillings per liter. $530. Was it 538? 538, 300. And this other one? 19,500. 500. So these are in shillings, isn't it? So this is what the question wanted us to do. Then lastly, number 4 is labor budgets, correct? So there's labor budgets. So here we have skilled and semi-skilled. So we have skilled and semi-skilled. We have skilled and semi-skilled. So we have product M. Product M, they're producing 2,100 units, isn't it? Each unit requires how many hours of skilled labor? Huh? 4, isn't it? So we're going to write here 100 times 4. You get how many hours? Huh? So we need here 2,400 hours. 8,400. 8,400 hours, isn't it? The same units also require same skilled labor. Each unit requires how many hours? 2. 2 hours, isn't it? So 2,100 times 2, 4,000. So for us to produce 2,100 units of product M, we need 8,400 skill hours and 4,200 semi-skilled hours, isn't it? And then we have also product what? Okay, how many are they producing? 14? 1450. Each unit requires how many hours of skilled? 2, 2 times 2,900, isn't it? And then semi-skilled, 5. 14 times 5? 7250, correct? 7250. So now this will get the total hours required, isn't it? Total hours. Hapa ni ngapi? Skilled na semi-skilled. 1,100. 11,300. And this other one? 11,450 hours, isn't it? What is the rate per hour? 120, and here 80, isn't it? So when you convert, what do you get? 1360. 1356,000. And this other one? 916,000. So that is the end of that question, isn't it? That is the end of that question. We call it labor budgets. Si ni rahisi hizi? Sumjaribu moja. Tujaribu moja alafu tuone. Imagine unaenda kudrive na ule mtu anakuja kudrive ndo anakaa kwa steering. Hataki ukae kwa steering, yeye anasema wewe kaa kando kwa hiyo kiti. Anakuonyesha hii ni gear, hii ni steering. Wewe usishike hiyo steering. Utajua kudrive kweli? Lazima pia steering, si ndio? Ugonge mashimo, ugonge gari ya watu, ndio ujue, si ndio? Kwa na swali lingine hapa, December 2013, I think so. December 2013, hiyo nikifanya haraka haraka tuende kwa cash budget. Alafu next week tunamaliza hii mambo ya budgets. Ama mtaki hivi haraka haraka? Mwanzo kurevise. December 2013, is it December or June? So in December 2012, December 2012, December 2012, question number five. Question number five, iko page number, I think it is page what? Page 35. Kwa hizo old papers, iko kwa page 35. Kwa zile old papers. Page 35, those old papers. Page, tafute sana, page 35. Page 35. That one is, you do it, hiyo unafanyia hapa. Alafu kuna ingine nimeona hapa, hii utaifanyia nyumbani. Ikipata nafasi, that is. Page 35. Page 35 is those old papers. Huh? It's question number five. Is it question number five? Question number five. Question number It is May 2012, not May 2012, question number five. May 2012, question number five. Question number 5B. May 2012, question number 5B. May 2012, question number 5B. The goodness with this kind of budgets, once you know them, it doesn't take a lot of time. You can spend even 10 minutes. Kama hizo unaona imechukua how many minutes? Very few minutes. So kama unaielewa, that is, it should take a lot of time. Lakini kama uielewi ndio itachukua muda mrefu. Alafu May 2021, question number 2B. May 2021, question number 2B ni ya nyumbani. May 2021, question number 2B. May 2021, question number 2B. May 2021, question number 2B. Sawa. Okay. So is it May 2012 question number? May 2012 question number 5C. Question number 5C, is it so? Yes. So the question reads, is it Killer Limited manufactures and sells a single product? So the financial year of the company ends on 31st December every year. The following data have been collected for use in preparing the company quarterly budgets for financial year ending 31st December 2013. So you have been given the sales forecast as follows: quarter one, 32,000, quarter two, 40,000, quarter three, how much? 24. Then number two, the standard material requirement and the cost per unit, material X, will be given the requirements. Then number three, the opening stocks are expected to be as follows. At the end of each quarter, closing stock of finished goods are expected to be 10% of the next quarter sales requirement, isn't it? And number five, the closing stock of raw materials is expected to be higher than the opening stock by 10%. Number six, sales for the quarter ending at 1st March 2014 are expected to be 36,000 units. Number seven, as from 1st July 2013, the selling price per unit is expected to increase by 10% from the current price of 600, isn't it? So here, number one, they want us to do what? Sales budget. This one is the easiest one to prepare. You can even close your eyes, isn't it? So here we have how many quarters? Quarter one, two, three, and so here we can write here quarter one, quarter two, quarter three, and quarter. So here is sales estimates in units, correct? The estimate in quarter one to sell how many units? 32,000. Is it so? And this one, how many units? 40. This one? And this one? 32. Selling price per unit, correct? Selling price per unit. So where do we get the selling price? Note number 7. As from 1st July 2013, 1st July 20, the selling price per unit is expected to increase by 10%, isn't it? So in other words, a quarter has how many months? 3 months. January, February, March. So the price will be how much? 600, isn't it? April, May, June. How much? July, that is the first quarter, is it? Quarter number 3. It will increase by 10% of 600 is how much? So this one will be 660, isn't it? So now you multiply the sales unit, the estimated sales unit times selling price per unit. They are saying in note number 7, as from 1st July 2013, that is from the 3rd quarter, isn't it? The selling price per unit is expected to increase by 10% from the current price of 600. So when you multiply, how much do you get? 19,000. 200,000. Then the other one? 24 million. And the other one? 840,000. And this other one? 21? 120,000. So that is how we make the sales budget. Okay, sawa, jipigieni makofi. Wewe ukupata? Ulipata? Mbona hujainua mkono? Ulipata? Nani alianguka? Hakuna yule alianguka. So number 2, production budget. Production. So production budget. Production budget, we said it is sales plus closing stock minus opening stock. That is the formula, correct? So we have how many products? We're producing products. A single product, isn't it? So this, we have Q1 here. We have Q1, Q2, Q3, and Q4. So the product is, what is the name of the product? XYZ. So the sales here will be, how many units are you selling? Tukipanga hiyo tutapata kweli? Tutapata. So this one will be Q1, Q2, Q3, and Q4, isn't it? So this one is the sales, isn't it? So the sales units in the Q1, 32. And this other one, 40, 24, and 32,000, correct? Those are the sales, eh? Then the closing stock. Closing stock. So we've been told, note number 4, at the end of each quarter, closing stock of finished goods are expected to be 10% of the next quarter sales requirement, isn't it? So closing stock is equivalent to next quarter sales 10%. So 10% of the next quarter. So the year would be 4,000. Here, 2,400, 3,200. Where are you getting that 600? Number 6 is sales for the first quarter of 2014, isn't it? So this one will be 3,600, isn't it? Then here we come here, opening stocks, you know. So the opening stock are expected to be as follows. This is 3,000, and here 4,000, is it? The closing stock in one quarter is the opening stock in the other quarter, isn't it? Ama? Si kweli? This is the closing stock here. It will be the opening stock. Si ndio? Itakuwa 4,000, si ndio? Na itakuja 2,000? Yes. Na unafanya nasema nini? The closing stock of raw material. Hiyo ni closing stock of raw material. Lakini hapa tunasema finished goods. So we have been using the opening stock at the beginning of the Q1, isn't it? Which is 3,000. So the closing stock in that quarter will be the opening stock in quarter number 2, isn't it? And here it will be here. So ni kama mlianguka nyinyi wote. Kuna wale alipata. Sawa. Haya, hiyo ndo production, si ndio? Hebu nione yako. Ni kweli amepata. Hapa nakuja ngapi? 32? 32,800. Na hiyo ingine? 38,400. 38,400. 24,800. Na hiyo ingine? 32. So tumemalizana na production budget. How many marks are those? 6 marks. And then material usage budget. Material We have material usage budget. Number 3, material usage. Material usage budget. So we are in material usage budget. So we have two kinds of material, material X, material Y, and material Z, isn't it? So we have quarter 1, isn't it? Quarter 1, we're producing 32,800 units. That is the unit that are being produced, isn't it? Each unit requires how many kgs? 5, isn't it? For material X. So we're going to multiply 32,800 times 5. What do you get? Huh? 164. So we have 164,000 kgs, isn't it? And then the same 32,800 we multiply by 3.75 for Y. Is it 3.75? Yes. Napata ngapi? 123,000. Sijui kama tunaelewana. Then we are still producing 32,800 units. Each unit requires how many kgs? 2.5 of material Z. So we want to know the total material X, Y, and Z we're going to use to produce 32,800 units of product in quarter 1, isn't it? Quarter 1, we are producing 32,800 units. In these units, we are using material X. How many kgs of material X are going to use to produce those 32,800, correct? So each unit requires 5 kg of material X. So we multiply the number of units that are going to be produced times 5 to get X. The same number of units produced times 3.75 for Y. And the other one is 2.5. How much do you get? 82. We go to quarter 2. Quarter 2, they are producing how many units? 38,400. You multiply by 5 to get the total quantity of material X. 182,000, correct? 192. 192,000, correct? We go to the next, which is 38,400 times 3.7. 38,400 times 3.75. So this one you get 144,000. And then the same units, 38,400 times 2.5. What do you get? 96,000. We go to quarter number 3. Quarter number 3, they are producing 24,800 units. Each unit requires how many kgs? 5 kgs of material X. We multiply. 124,000. The next one, 93,000. The next one, 62,000. And then we go to the last quarter, quarter 4. Quarter 4, they're producing 32,400 units. You multiply by 5 kgs, 5 per kg. 1. So this is 162,000. Na hiyo ingine 121,500. Na hiyo ingine 81,000, si ndio? Hizo ndo kg za materials that were used, material X, and then you add them together. The first one. So they want the material, it is how much? 642,000. Last one, 321,000. So this is the total quantity of material A that is going to be used in quarter 1, quarter 2, quarter 3, quarter 4, and the total for the year. Quarter 1, quarter 2, quarter 3, quarter 4, and the total for the year. Napata ngapi? 441,500. 481. So that one is done. That is material usage budget. And then material purchases budget, isn't it? So lastly is material purchases budget. So what is the formula? We said the material usage plus closing stock raw material minus opening stock raw material. That is the formula. So here we have material X, material Y, and material Z. So here you write your material usage. So they're going to use 642,000 kgs the whole year, 481,500 kgs, 321,000. Material purchases budget for the year. So they want for the year, isn't it? And then now you write here closing stock raw material, closing stock raw material. Closing stock raw material. Then you have been told the closing stock raw material is said to be higher than the opening stock by 10%, isn't it? So the opening stock raw material X was 3,200. So the closing stock is higher than the opening stock by 10%. So that is 1.1 times 3,200. So what do you get? Huh? 3120. 3520. And the other one? Huh? 5720. Huh? 8. I hope you can see how we're generating these values, isn't it? I've been told the closing stock is higher than the opening stock by 10%. Then you realize opening stock. Here is how much? 3,200. The other one is 5,200 and 800, isn't it? You see, it does not take a lot of time. These questions. So that one will give us how many marks? 1, 2, 3, 4, 12 marks. So kisha jaribu hiyo ile nimepotea hiyo, na ingine kuna ingine ilifanywa 204 kitambo, kama wengine hawajazaliwa, si ndio? Hiyo swali inakuwa mzuri sana, ujaribu 204. Make sure umejaribu ya May 204. Sasa inaweza rudiwa hiyo swali, inakuwa mzuri sana. May 204 question number, let me see. Yeah, budget, this kind of budgets. So according to me, that budgets, function of budgets, well covered, unless there is a question. So you attempt the other one and this other one of May 204. Let me show you the one for 204. Odua anda yake nimeiweka hapo kwa hiyo paper. Unaweza angalia. Iko kwa handout. Is it kwa handout iko hapo anza, si ndio? So utaangalia. So jaribu angalia hiyo ya 204 please. Hata nimeandika swali yenyewe hapo. CPA June 204 question number 4. June 204 question number 4. The question is even written in the handout. 204 question number 4. So there is a question there and the answer. So you don't need to struggle. Even May 2017 is down there. And there are so many others. So that is the end of functional budget. So the next budget in line is cash budgets. Cash budgets. Do you have enough time to do cash budgets? No, no. So now that one will be the end of our class today. So in the next class, we'll be doing cash budgets and flexible budgets. And then on Sunday, we finish with master budgets. Any question? So that is the end of our class today.